on the retail. There has been an order from Donald Trump, as the Wall Street Journal reports, where he wanted to expand 401k access to private markets, right? Now, this is contrary maybe to the previous one. This is probably a good news because it means opening a good chunk, right, of a more publicly available markets. I guess the question, from my perspective, is what does that mean for retail investors, and is this essentially going to democratize private equity for everyone? What do you think?
Private equity is a very solid product when it comes to return. So here is the big challenge here in this is risk versus return, right? What is that risk that market will inherit? What is the risk that investor will inherit in this scenario? And I think where the current proposition, if you look at any of the pension funds, they come with a lot of risk. Basically, they have a very holistic risk management that looks at the underlying risk of the asset, it looks at the underlying risk of the market, it looks at the credit. So the risk itself, the risk spectrum and the definition when it comes to the pension funds or 401k, that is too high. And the appetite to even start bringing from a retail investor standpoint is where, first of all, there is no certain that kind of a return that is comes with that kind of capital available for retail investors at this point, unless until that particular PE fund is they have some public shares and stuff like that. So the mobility to go into those kind of uh, transactions, it's all based on risk versus return and how that risk versus return entails the mobility within the market and the credit. And that is where I think most of the challenges that retail investors have is they look for these deals to invest and through these options and channels with regulatory help. For example, if you look at Tesla, Elon Musk is into all the sectors actually. He's into energy, he's into transportation, he's into telecom. But at this point, none of those enterprises have those consumer markets. So people go ahead and invest in Tesla. So that is the identity factor. Today, I could see Elon Musk directly from Tesla and I go invest in it. So retail investors will not be able to engage in activities where, hey, this is where I would go with this deal. They will have a decent return range coming into it, and they will also have to increase their appetite on the return as well as understanding the risk management of that entire spectrum. And that is where I think um, the asset management would come into play and the investment advisory would come into play as it eases into go into those products.
Yeah, look, I definitely agree, like with everything that you say, and we've seen in European markets. I think there is an example we have actually in Italy, Azimuth Capital. They have created one of the very first fund of funds that was essentially giving access to retail people, to private equity performance. There is definitely an appetite there. Um, my question is, doesn't this though bring structural complexity to the current operations? Because by the moment private equity companies want to direct attack these markets, then they have to get into, providing daily liquidity, NAV, free transparency. Like there is a lot of kind of public market work to do. They're not really set up for, right? Because that's why it's called private market. So, don't you think this is gonna be very expensive to get into for the funds?
Definitely, because if you look at the transactions that a private equity really works on, is you have the equity, which is majority or minority into a portfolio company, number one. Number two is either merger and acquisition, right? So when you are setting up these funds, private equity funds, there are different ways an investor comes into mobility standpoint. It could be co-investment, it could be direct investment. So if you look from an investor journey, your entry and your exit on that transaction is very important. So that is where most of the large private equity companies they also sell their shares through public basically. So you can directly go and participate into the value creation of that particular private equity fund if they are a public listed company or if they are already in a particular market. So that's what the entry and the exit is a big challenge here for investor, and the private equity manages that very well. And again, you have to look at the entire pieces of the segment of the investors. It's not only just retail investors. You know, if you look at the larger scale, you have pension funds, you have celebrities, you have all those other high net worth individuals and stuff. So setting up that structure with an entry and an exit, and from a valuation standpoint and a possible continual dividend, that's what the private equity model is. And to structure all of that and open it to the retail investors, definitely, there will be challenges, and it will not happen overnight. It has to come in and show that result. Definitely private equity fund has a guaranteed dividend coming into play, whether it's 6 to 12%, or a management fee would be, you know, under a 2% if there is a larger deal. But I think to even continue that process of, opening it up, it will take some time, and that is all based on the structuring of a fund, and that would come with an extra cost on the legal providers, which could be, setting up an offshore fund or a parallel fund or a feeder fund, and all those areas are also a challenge. So I think the fastest way, the current way, is go invest. If that particular private equity fund is already listed in a stock market, go buy the stock. So you make money there.
Enough, fair enough. You mentioned